All right, Brian. So we're using the financial order of operations to uncover some planning that we ought to be thinking through before the end of the year. And one of the things that we get so excited about this time of year is that it comes up to one of our favorite days. And one of our favorite days every single year is Net Worth Day. And one of the beautiful things that your net worth statement does, if you're tracking it every single year, is it allows you to see, okay, what falls on my balance sheet? What are all the things that I own, and I lay that beside what are all the things that I owe. And if you have some things on your net worth statement like credit card debt, high interest auto debt, consumer loans, we want you before the end of the year to begin thinking, how am I going to begin getting my liabilities under control?
Yeah, I hope people will take advantage. We have a free version. If you just go to moneyguy.com/resources, we have a free net worth template for you. But if you're somebody who really wants to accelerate your journey and kind of have that dashboard view to see what the changes are, because a lot of times when you're in the beginning stages, you don't even know what you should be looking at. We try to give you a shortcut on that by creating our own dashboard for you with our net worth tool. By the way, this is the same tool Bo and I are using
Every
for
year.
our own personal net worth statements. You can go to learn.moneyguy.com if you want to go ahead and get that accelerated head start.
Now, Brian, you talk all the time about like if you're an investor, a really good rate of return is somewhere, man, if you can get like 8 to 10% annualized on your return, that's amazing. And yet we know that there are debt providers out there, credit card companies out there that are charging 15, 20, 25% interest rates. If you have those kinds of debt on your balance sheet, it is going to be so hard for you to begin building wealth. So between now and the end of the year, we want you to see, okay, how much bad debt can you begin to extinguish? How much of that can you wipe off so that you get to start next year nice and clean?
So we'll start with the easy one. That's why we gave it to me, as I take the easy stuff, is that credit card use is A-okay, but credit card debt, no way. Because when Bo was talking about those banks and lenders that are probably charging you 20, 25% or greater, he's talking about your credit cards. That is no-go land, guys. That is high interest debt. I'm going to say something that's my hot take.
Ooh.
I even think 0% credit cards and that whole transfer game is a fool's errand that's not worth the hassle factor, because just the consequences of screwing that up can really side rail you very quickly. So we consider all credit card debt to be high interest debt.
I love that. All credit card debt is high interest, but that must mean there are other kind of debts that might not always be high interest. And there are, in fact, and it's types of debt that a lot of people have, whether it be auto loans or whether it be student loans. So if we just think about auto loans, we think that if you are in your 20s and you have an auto loan greater than 10%, assuming that you still fall into the 23-8 category, and your auto loan is above 10%, we would consider that to be high interest. Anything below that, we would not get super aggressive paying off. In your 30s, we consider auto loan to be high interest if it's above 9%. And in your 40s, we consider auto loans to be high interest if it's above 8%.
Let me go ahead and put some troll repellent out there. Everybody needs to understand, cash is preferred for all car purchases.
Sure.
But we have a no hypocrite policy. When I was young, right out of college with that accounting degree, so excited to just get rip-roaring and start building wealth, I realized very quickly I needed to have reliable transportation to get to that job so I could actually start building wealth, and I needed to go finance that car. So we've tried to give you these rules so that just in case you're at that starting blocks and you also are going to need to go buy a reasonable car, that's where 20% down, no longer than 3 years, and not greater than 8% of your income, the 23-8 rule comes into play. But of course, we'd love for you to pay cash. This is not a get out of free to go buy that fancy luxury car and finance. This is only to get you to reliable transportation. Think Corolla, not Land Cruiser.
All right, so that covers auto loans. What about student loans? Well, we have the same type of rule for student loans, but the numbers change a touch. If you're someone who's in your 20s and your student loans are above 6%, you may want to begin prioritizing paying those off. When you get to your 30s, if your student loans are above 5%, you may want to prioritize paying them off. And then if you're in your 40s and your student loan interest rate is above 4%, you may want to begin paying it off. That's where we would quantify those loans being high interest. And between now and the end of the year, we want you to start knocking that stuff off of your balance sheet.
Yeah, there's a lot of things going into these numbers and these guidelines like risk-free rates of returns. We save you all that madness just to tell you, hey, these are some good benchmarks so you can quickly triage your financial life to make the right decision for how you're looking at your high interest debt.